Artificial intelligence has taken the world by storm. Every headline, every investor pitch, every tech conference seems to orbit around AI, promising a revolution that will reshape industries, redefine creativity, and even challenge human intelligence itself. But as billions of dollars pour into AI startups and companies scramble to sprinkle AI across their marketing decks, a serious question emerges. Is AI mania turning into a bubble? To understand that, we first need to know what a bubble really means. In economics, a bubble forms when the excitement around an innovation drives valuations far beyond its actual tangible value. It happened with the dot-com boom in the late 1990s, when internet companies were valued at billions before they ever made a profit. It happened again with cryptocurrencies, and now, some experts say, it may be happening with AI. Look around. Major tech giants are spending record-breaking sums on GPUs, data centers, and AI infrastructure. Venture capital is flooding into generative AI startups, many of which have no clear revenue model, no paying customers, and sometimes not even a working product. Everyone wants a piece of the AI gold rush, from chip makers to chatbot developers. The fear of missing out is driving a frenzy that feels eerily familiar. But here's where the story gets interesting, because this bubble, if it exists, isn't built on nothing. AI is already transforming workflows, automating content creation, and powering breakthroughs in healthcare, finance, and education. Tools like ChatGPT, Gemini, and Claude have proven that AI can generate real utility. So, maybe this isn't a pure bubble, but rather a case of short-term overhype around a long-term technological shift. Still, cracks are showing. A recent MIT study revealed that around 95% of corporate generative AI projects fail to deliver measurable results. Many companies jump on the AI train without understanding the cost, the data needs, or the real value proposition. At the same time, investors are betting on massive growth that may not materialize soon, creating a dangerous gap between expectation and execution. There are also practical risks. Training AI models demands enormous computing power, electricity, and water, straining global infrastructure. Regulatory pressures are mounting across the US, Europe, and Asia. And if the public begins losing trust in AI due to misinformation or job displacement, the market could cool rapidly. When bubbles burst, they don't just deflate stock prices. They often reshape entire industries. However, some analysts argue that AI is less like the dot-com bubble and more like the early days of the internet itself, a period of chaotic overinvestment that eventually led to the platforms we depend on today. In other words, yes, there may be short-term hype and even corrections ahead, but the long-term impact of AI could be far more durable than skeptics think. So, is AI mania a bubble? Maybe partially. It's true that valuations and hype are soaring beyond reason, but it's also true that the underlying technology is changing the world at a fundamental level. We might be in a speculative phase, but not necessarily a doomed one. Perhaps this AI bubble is just the noisy, volatile beginning of a technological era that's still taking shape. At Simply AI Explained, we like to cut through the hype and get to the truth. And the truth is, whether AI's rise turns into a bubble or a lasting revolution depends on how wisely we build, invest, and innovate in the years ahead. So what do you think? Is AI mania a bubble ready to burst? Or are we just witnessing the next wave of progress? Let us know in the comments, and don't forget to like, subscribe, and hit the bell if you want more deep dives into the world of AI.